Good morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer here at Worth Asset Management. Today is October 16th, 2023. We have a war in the Middle East. We have inflation data that came in hotter than anticipated, and bank earnings came in better than expected on Friday. This week we have retail sales, a lot of housing data, and a lot of earnings from a lot of companies this week. Let's see how we're positioned and jump on in.
Okay, let's go to the top three market headlines from last week. The major U.S. stock indexes started the week on a positive note, but turned negative on Thursday and Friday as earnings season got underway. The S&P 500 and the bond market, represented by the AG, posted very small weekly gains, while the NASDAQ and the world equity fell slightly for the week. Gold was the big winner, gaining over 5% for the week. Number one market headline from last week was the Middle East war. Market participants entered the week with news that Israel declared war on Hamas after a surprise attack launched by them last weekend. The potential for a wider regional clash weighed on sentiment last week, but reports so far give the impression that the Israel-Hamas war is still a two-party conflict with nobody else entering. The stock market still fared okay for the week, but those geopolitical angst picked up on Friday, causing a rush for those safe haven like utilities and gold, which I touched on, and the long bonds. The PPI and CPI reported last week, and while the producer prices index and the consumer price index report were not as friendly as investors envisioned, the CPI report showed little change in inflation, and September's overall annual figure came in at 3.7, which was the same as the previous month, but excluding housing and energy rose while food costs slipped. So it's still way above the Fed's 2% goal, and one of them is coming down while the other one is going up. And why this is important, because if we remember from back in the 70s, we went through three waves of inflation, whereas some are saying that we're here, the Fed is hoping that we're here. But keeping in mind, a reminder is why the Fed is not willing to concede that inflation is tamed. They may pause at the next Fed meeting, but we shall see heading into 2024 where that leads. All right, earnings. Earnings season got off into a full swing on Friday as the three major U.S. banks reported their third quarter results, and each one exceeded analysts' expectations for net income and revenue. Again, their bar was lowered. But as of Friday, analysts were forecasting that earnings for all the companies in the S&P 500 would rise slightly by an average 0.4 overall, according to FactSet. If that does happen, it would actually break a string of three consecutive quarterly earnings decline. And since we're here right around on the 16th, we still have a lot more banks and a lot more possible trouble heading forward, not only for the banks, but for all the other companies. So we're just at the very beginning of the earnings season. All right, let's go over the top 10 major asset classes, their performance, and how we're positioned. On a short-term basis, we did get some green over a 3-week period. The NASDAQ actually went back to bullish just slightly and finished out at 1.48. The US dollar and gold, actually, even though it's negative, just turned positive on a 3-week. So it is now bullish on a short-term basis. Zooming out intermediate term basis, we still have the US dollar and commodities as our only two bullish areas of this market. All right, let's take a look at the chart of the S&P 500. And we touched on this gap down after filling this gap. We just barely eat into that. It didn't completely fill it. So most likely, maybe this week we'll actually get a little more upside and fill that. And then where we go from there, because it's right at this resistance zone. So it's got to break through there and get back up here. And if that possibly happens, we could again start adding and selectively buying on the equity side. If not, look out, because we might start testing some of these other areas, these lows that we saw at the earlier of this year. All right, let's go over the top 3 market movers this week. On Tuesday, we retail sales, and that's the proxy for consumer spending, which is 2/3 of this economy. And so they have risen for 5 consecutive months, and we'll see if we get the 6th month with the rise in interest rates and how that's affecting the consumer. On Tuesday, Wednesday, Thursday, we get a bunch of housing data. We get the National Association of Home Builders on Tuesday, and then we get housing start and building permits for new home construction on Wednesday. And then lastly, we get September existing home sales on Thursday. Friday, actually, this is all week. We get a lot of earnings. Some of the world's biggest and most prominent companies will be reporting this week, including Tesla, Netflix, Johnson & Johnson, Bank of America, Goldman Sachs, Morgan Stanley, American Express, Schwab, AT&T, Procter & Gamble, Schlumberger, and Lockheed Martin, and there are even more. So it'll be a big week to see how the earnings are coming in for the third quarter. All right, that's it for this week. Thank you for joining us. Our next update is Monday, October 23rd. As always, continue to subscribe, like, and follow, and we shall see you next week. Have a great week trading.